My name's Jessica Ross. I head up corporate affairs at Savannha. There's a lot of information on the slides. I'm going to try and hit the highlights, but would encourage you to have a look at our website if you would like any further information. There's also analyst research on our website as well. Savannha has been listed since 2014. We're listed on AIM. Market cap's around $270 million. The management team are very aligned and have invested, board of management have invested over $5 million in the business so far. We're in the process of acquiring assets in Nigeria from Savannha. That will allow us to pay a maiden dividend of $12.5 million in 2019. We're focused on Niger and Nigeria. I think it's worth highlighting our shareholder register. We think it's one of the best on AIM, something that we're very proud of. Names like Capital, Fidelity, and Standard Life have been with us since the IPO and have supported us in every capital raise. Miton, Legal & General, IFC, Ashmore, and TT are more recent additions to the register, but nonetheless have been very supportive. So the two business units that we have, in Niger we have two PSCs, R1, R2, and R3 and R4. That's around 50% of the main petroleum basin in country. The assets are large, they are low cost, and importantly, they are low technical risk. The business model is pretty straightforward. The basin-wide historic finding cost has been around $1 per barrel, and the expected NPV of discovered barrels is about $6 per barrel. We've already made 5 discoveries. Our focus on value creation is going to be to put those discoveries into production, and then extend our exploration campaign. We've identified 119 structures for potential drilling in the future. In Nigeria, as I said, we're in the process of completing an acquisition from Savannha. There are 2 upstream assets and an interest in an infrastructure business. These are the current cash flow engine of the business. So the focus there is delivering the production and the cash flows from those assets, and then going forward, focusing on adding more production at higher margins. Just to give a bit of context on Niger, CNPC really set the scene for Savannah's success there. So they came into the country in 2008 and have delivered what is an unbelievable achievement. They have proved up 1 billion barrels of 2P reserves. They've built a refinery and a pipeline in country. They've established infrastructure hubs, logistics bases. They've delivered first oil for the country, acquired thousands of kilometers of 2D and 3D seismic. Savannha came in 2014. We acquired the R1, R2 license initially, and then 2015, 1 year later, we acquired R3 and R4. That leaves us, as I said, with 50% of the basin. In terms of what we've done, we've acquired a full basin FTG survey, around 800 kilometers of 3D seismic in this red R3 East area down here. And then earlier this year, we started our maiden exploration drilling campaign and made 5 discoveries from 5 wells. The operating environment, I think, is really worth highlighting. So the Agadem area largely looks like this picture on the top left of this slide here. It's flat, it's sandy, it's population remote. That combined with the infrastructure hubs that have been created by CNPC and their service contractors has meant that every single operation that we've done in country has come in below budgeted time, and most importantly, safely with no lost time incidents. So it's a proven operating environment, and we are proven operators in the Agadem area. So as I mentioned, 5 discoveries so far. We chose the R3 East area because it's on trend with the 3 existing producing fields in the basin. We've called time on the initial drilling campaign, so that was after 5 wells, and we've confirmed that we'll now focus on testing the wells, bringing these existing discoveries into production, and then a new drilling campaign is planned to start in early 2019. That will focus on delivering productive capacity in the R3 East area to support the EPS, and then exploration wells in the R3 Central area, which is just above to the left. high level, in terms of the infrastructure in the basin, as I said, there's already a pipeline and there's already a refinery. So what we did a couple of months ago was signed an agreement with the government, which has meant that they will support us in accessing this domestic infrastructure. So our initial production will be domestic focused and will be sold at the refinery gate. In terms of what we're thinking for the EPS, as I mentioned, we need to test the well. The first well that we'll test will be AMD down here. We'll then move into the first phase of the EPS, which will be up to about 1,000 barrels of production per day, which will be trucked up to the pipeline tie-in point at Gumeri. We'll then move into the second phase, which will be constructing a pipeline, again to the pipeline tie-in point at Gumeri, and will enable us to deliver about 5,000 barrels a day of production in the year following pipeline construction. So to summarize, in Niger, we've already delivered a 100% success rate. That combined with the basin-wide exploration success rate of 75% and 120 mapped targets for potential future drilling will mean that we should be able to keep replicating that success. We're a proven operator in the region. We are putting our discoveries into production, and the finding cost is low. In Nigeria, just a quick highlight in terms of why we moved into Nigeria. I think there's a perception that it's difficult to make money in Nigeria. The chart on the top left-hand side proves that that's not the case. So this is through different oil price environments, different political regimes, onshore, offshore, gas, oil. The industry has always made money in Nigeria. I think the geology speaks for itself. We see a lot of opportunity for future consolidation in country, and the industry is well established. In terms of what we're acquiring, 2 upstream assets, Ukor and Stub Creek, you can see them on the map on the right, about 100 million barrels of 2P reserves, 62 million barrels of 2C. Those upstream assets produce into a midstream business called Accu Gas, which I'll come on to, but they're largely gas. The gas price is fixed but rising with inflation clauses, and importantly, almost all of the gas is contracted with payment guarantees. So the largest contract has a World Bank and JP Morgan payment guarantee. In terms of the Accu Gas business, this is how the upstream sells its gas. So Accu Gas processes, distributes, transports the gas to the 3 main downstream customers. It is the only significant processing and transportation infrastructure in this part of Nigeria. And there's about 40 TCF of undeveloped gas in the region. So if you want to develop and produce your gas, you have to come to the Accu Gas business. There's a material amount of spare capacity in the business, both in the processing facilities and the pipeline. And the switching economics are compelling. So at the moment, Accu Gas realized gas price is about $3.5 an MCF. All the industrial users in this region are using diesel, which A, suffers from reliability issues, but B, is much more expensive, so is around costs of greater than $10 an MCF in equivalent terms. So the business plan for the Accu Gas business is to add more customers at higher margins. And just to wrap up, it's exciting times for Savannha. As I've said, Niger, the focus is moving us into production and starting to deliver cash flows. The EPS has the potential to deliver about $50 million per annum of cash flow net to Savannha. In Nigeria, we're on track to close the acquisition of the assets from Seven by the end of this year. That will then be the main cash flow generating engine of the business, and will enable us to focus on the growth potential in the Accu Gas business going forward. That's it. Any questions?
Thanks. Thank you, Jessica. Has there any decision been made about the main export route out of Niger? There's been a lot of discussion about going to the east or the west. Has that actually been resolved yet?
Yes, so CNPC have completed their pre-feasibility work on the Benin route, which is now the preferred option. So going west through Niger, south down through Benin, and then out to the coast at Cotonou. What was also announced a couple of months ago over the summer was an MOU between Niger and Nigeria. The two countries are quite close, so the intention is that the large-scale export line will also spur into northern Nigeria to a new build refinery, which is anticipated to be built in Katsina.